Hi there, welcome to Kneppy Invest. It is 1st of October, the date I am actually doing this video. Not sure when I release this video on YouTube, but we will see the first September quarter, June quarter reports being released in the next week and a bit. So I'm going to have to get through these final few group June quarterly report videos. In this particular video, I'll be looking at a few companies, one company in particular I'm actually have a little bit of interest in. It's a recent IPO called EZZ. Looking at another company, Thorn Group, which is surprisingly that they do have to issue quarterly reports. Looking at an agricultural company called Wingara and an oil and gas company called Otto Energy. Let's have a look at the first company, which is Wingara AG Limited. Wingara AG Limited is in agriculture. They have a ticker WNR. They are a wholly integrated and controlled supply chain solution company for the provision of quality agricultural products. I believe they do stuff like hay and that sort of thing. I haven't delved too deeply into exactly what Wingara do. Listed on the ASX in January 1990, so they have been around for quite a while. And even though they've been around quite a while, the market cap of this company is only $28 million. So you'd have to say, since they've been on the market for 30 years, with a market cap of $28 million, you have to say this company has underperformed since they listed in 1990. That market cap is at a share price of 11 cents. The revenue in financial year 21 was 38 million, operating cash flow positive by $320,000. If we turn our attention to the June quarter results, which was their first quarter of their financial year, receipts from customers, 11.6 million, sorry about that, 11.6 million, and they were operational cash flow positive by $1.5 million. So if you compare this June quarter results to the financial year 21 in terms of operating cash flow, it was a really good quarter. Operational cash flow positive 1.5 million. If they continue that sort of operation success moving forward, this company could be undervalued. They began the quarter with $1.9 million, but finished it a little bit lower at 1.7. And the reasons behind that, they spent $555,000 on capital expenditure and almost $1 million of leases. And because of the new accounting standards that were brought in a few years ago, leases would have been in the operating cash flow section. Now they're not. So the way I look at it, the real operating cash flow for Wingara was more like $500,000, not $900 or not $1.5 million. So I do take leases into account when I look at the operating cash flow of companies that do spend a lot of money on leases. When we look at the receipts history for Wingara, it's all positive. We have exactly what I want to see in cash receipts history, going all the way back to the March quarter 2016. Receipts for that quarter, $1.6 million, and for the most recent quarter, $11.6 million. We have seen a significant increase in receipts over this period of time. So nothing to complain about here with Wingara. Things are looking quite good for the company. All they have to show for me is that they can maintain being operational cash flow positive over the next few quarters. It seems like they do have problems maintaining that, or the profit margins in this company are quite low. Again, they're also in agriculture, and there's a lot of things that can go wrong in that sector that are beyond the control of the company. I try to stay clear of most agricultural companies simply because of that fact. Though receipts have been going up over the past 5 or 6 years, you can't really see that when you look at the chart. This is the weekly chart going back to the start of 2016. So this coincides with that cash receipts history. And in fact, the share price right now is under pressure. It's in a well-defined downtrend, which actually did begin in 2020. From 2016 to 2020, share price was going sideways, trading in a bit of a range. But ever since the start of 2020, share price has been falling. It's fell from about 28 to 30 cents. Right now, share price is around 11 cents. Nothing to get too excited when you look at the chart. So one exciting thing when you look at the cash receipts history, but when you look at the chart, nothing too exciting there. Next company we want to look at is Thorn Group. This is not a company that used to issue quarterly reports, quarterly cash flow reports, but then the ASX asked them they had to because of some issues. Not sure what those issues are. A ticker code for Thorn Group is TGA. They are a financial services provider in the consumer finance division, so they own Radio Rentals and Rentlo Reinvented. They also have a business finance section with Thorn Money and Thorn Business Finance. Listed on the ASX in December 2006, so again, they've been around for 15 years, 14 or 15 years. The market cap, $66 million at 19.5 cents. The market cap of this company has been well higher than that over the past 5 years. Receipts to customers in financial year 21, $296 million. Operating cash flow positive, $200 million. And if we turn our attention to the June quarter results, just like Wingara, this was their first quarter of their financial year. Receipts to customers, $60.3 million, and they were operational cash flow positive by $35.8 million. They finished the quarter with $90 million of cash, but they also had $133 million of net. They were able to repay $33.6 million of loans. Not a lot of excitement in this company right now, but when you look at the financial state of the company, there are some interesting things there. There is potential this company could be undervalued, and what's been driving the share price down and the market cap down to 66 million is just negative sentiment around this company. And when we look at the chart, you'll notice the share price has been going sideways for the longest period. So the share price is consolidating, and what I'm waiting for this company is a bit of a breakout to the share price to the upside, and we might get that if we do have some good financial news in the next few years. So that's what I'm waiting for with Thorn Group. And I did get a little bit ahead of myself talking about the charts. So here is the chart. Again, this is the weekly chart, actually going back to the middle of 2014. And the reason I went back that far is because during that period, or that year, we did see the share price of Thorn Group get up to $3. And then after that, we saw Thorn Group move into a long-term downtrend, which began in 2015 at around $2.50. And the share price fell from 2015 all the way to the end of 2020, a well-defined downtrend. The low in the share price was about 5 or 4 cents during the COVID-19 financial panic. But again, the share price has been consolidating between about 15 and 25 cents over the past year, 18 months. Maybe not 18 months, but 15 months. And this is exactly what you want to see with a consolidation period. Is the share price going sideways? We have seen a bit of a spike or increase in volume during that period, that consolidation period. So the main thing you're waiting for when you see a share price in this consolidation period is a breakout in the share price to the upside that corresponds to some positive financial news. So even though a Thorn Group, or the sentiment around Thorn Group is or has been quite negative, some of that negative sentiment might be waning right now, and who knows, that negative sentiment or that neutral sentiment could shift to positive sentiment, and that positive sentiment could drive the share price higher. Now, what they do, their business they do is not something that really tickles my fancy, so that's something else you've got to take into consideration as well. Now onto the company that actually does interest me to a small extent, and that is EZZ. The ticker code is EZZ. I had a little bit of time trying to figure out exactly what to call their business, and I ended up with healthcare products. So this company develops, produces, and distributes consumer health products, including EZZ Coffee Jelly and EZZ Magic Gummies. And those are the two ones I decided to name in this video simply because I just love the names. Listed on the ASX on the 3rd of March 2021. So this company has not been around for very long, just over 6 months. The market cap is only 22 million. That's at 51 cents. But the share price has been rising since I started looking at this company. Cash receipts for financial year 21, 23.7 million, and EZZ was operational cash flow positive for the year by 254,000. If we turn our attention to the June quarter, receipts to customers 4.4 million, so a little bit lower than previous quarters, but they were operational cash flow positive by 624,000. Fair bit of cash on hand, in fact 8.9 million, and in fact their cash on hand increased by the operational cash flow because they don't spend much money in financing and investing activities. Because they have $9 million of cash, market cap 22 million, that means enterprise value is only 13 million. So there could be some good value when it comes to EZZ. I would have to take a closer look at all their products. They do seem to have a fair bit of products, and how well those products are selling, that's something else I would want to look at. But this company is or has interested me to do some further research on in the future. They are a recent IPO, that also interests me, and I would like to see just how they do perform over the next few quarters. The other thing that interests me is what's happening with the share price right now as well. And let's talk about what's happening with the share price right now. When they did list on the ASX, there was a fair bit of hype. In fact, the first day they did trade on the ASX, the share price increased from about 68 cents to a high of about $1.22. And then the next day, the share price got to a high of $1.40. So a lot of hype in this company. In the first 3 days, they were traded on the ASX. Again, I've mentioned this in a few videos. I steer well clear of IPOs during the first few weeks they've traded on the ASX, because that's when you see a lot of hype in a company. You can see the share price elevated to too high of valuations, and you will a lot of times see the share price slip back as that hype wanes away. And that's exactly what's happened with EZZ over the past few months. In fact, the share price has fallen from the $1 range to a low of about 37.40 cents. But recently, in the past month, since the start of September, the share price has started to turn around. In fact, you could say the share price of EZZ has moved into a possible uptrend in the past few weeks. And that's another reason I'm a little bit interested in EZZ. They are operational cash flow positive, and it looks quite interesting on the chart. Final company I want to discuss in this video is Otto Energy. This is an oil and gas exploration and production company focused in the US Gulf Coast, which is fairly similar to another company I talked about recently. And that company had or issued quite a few announcements in regards to how their projects were affected by Hurricane Ida. I'm not sure Otto Energy operations were affected by Hurricane Ida. I actually didn't have a look at any announcements. Anyway, ticker code for Otto Energy, OEL, business energy, oil and gas exploration and production, listed on the ASX in December 2004. So quite a few of these companies I've talked about today have been listed for a long time. Market cap $43 million. That's at 0.9 cents, which means they probably have a lot of shares on issue. Yep, 4.8 billion shares on issue. That's probably too high for my liking. Receipts to customers for financial year 21, 26.8 million. This company is operational cash flow positive, 3.8 million for the financial year. But if we turn our attention to the June quarter results, and all their financial information is in US dollars because they are operating in the Gulf Coast, receipts and customers for the June quarter, $9.9 million, so just shy of 10 million. And they were operational cash flow positive for the June quarter by $5.6 million. Now that does interest me that they were highly operational cash flow positive for the June quarter. And the question is, can they continue that for the next few quarters? And if they can, a market cap of $43 million for a company that's producing a fair bit of cash flow in their operations is quite attractive. They did increase their cash on hand from 7.8 to 11.1 million, and they were able to repay $2.3 million of debt. I do like companies doing that, and the fact that this company is highly operational cash flow positive, they are able to repay debt. But again, shares on issue, almost 5 billion, and that is a major red flag when it comes not only to Otto Energy, but any company that is listed. Now, the reason I'm including this part, this in this video, is a possible reason why they had a really good June quarter. It had to do with the freezing weather conditions in Southeast Texas during February 2021. They talked about how their March quarter revenues were probably higher than they should be because of that freezing weather conditions. And I think some of that revenue, as in terms of cash receipts, came through in the June quarter. So I don't expect the September quarter results to be quite as good as the June quarter. So that's something to keep in mind, and I'm very happy they actually did include this in their activity report. As we turn our attention to Otto Energy's weekly chart, this goes back to 2014. Nothing at all exciting about this chart. This is actually a fairly lackluster, disappointing chart, particularly for any shareholders who have held on to Otto Energy shares over the past 7 years. and the share price has fallen from about, we'll say about 8 cents in 2014 to a current share price of 1.1 cents. No breakout in the share price, no uptrend right now. Share price has been going sideways for about, we'll say, 15 months. So again, just like with some other companies, I'd want to see a breakout in the share price to the upside. So just like Thorn Group, I want to see some good financial news so they have another good September quarter, another good December quarter. And if we start to see the share price rising, that's the time to buy into Otto Energy, not before then, because the risks right now in this company, just because the share price is going sideways, probably a little bit greater than what you want. You want to see a breakout in the share price. In this sort of situation, you can be patient and just wait for that breakout because you just don't know how long it's going to be, if it happens at all. That is all I have for this June quarterly report group video featuring 4 companies: Thorn Group, EZZ, Otto Energy, and Wingara. If you have any questions about any of these 4 companies or any other company on the ASX, I'd love to hear your thoughts, your questions, your opinions. So leave it in the comment section. And the last thing I always should say is I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.